tricky times in the gold market these days. So in today's show, we have to look at the signals that the charts are sending us on the short to midterm time frames. Long term, things are looking great for gold, but short to midterm, we really have to pay attention to the signals to understand how to position ourselves, how to adjust our strategy to the developments in the gold market. And we need to talk about a very important factor that not enough people are paying attention to. Let's get into it. Golden times right before the weekend. That's how we like it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Welcome to Hot Trades of the Day. My name is Daniel Wilhelmi. If you're new to the channel, we're glad you're here. Hit the subscribe button so you don't miss any of the videos, like yesterday's video about silver, where I talked about adjusting our investment strategy according to the developments in the markets and in the charts. A really, really important subject that not enough people are talking about, that a lot of private investors, including myself, had a lot of problems with. So, what did I do yesterday based on the developments in silver? I may or may not have bought a position that shall not be named. I'm not your financial advisor. I'm not telling you what to do, but that is how the professional money works. They adjust their investment strategy and the percentages of their investments in the market according to the developments. And we're going to talk about this a little bit about today. But let's start with the gold chart first. So, man, yesterday was a wild ride. And I really, really hope that you didn't get caught on some short-term day trades, because that was a widowmaker yesterday in the markets. As you can see, we broke the uptrend, we ran up, then we gave it all back and actually closed negative and could not break. And this is the most important part. This crucial double resistance zone that I have pointed out for you as the line of demarcation on the upside for gold. It's the 50-day, that's the purple line, that's the most important one. And then we have this horizontal resistance zone around 4,780.81 in the gold price. Okay, so in the past that meant that gold immediately rolled over. But that's not what happened in Asian and European trading. We're actually holding up quite well, and we are holding above the broken downtrend. So now we got a really tricky situation, as if things were not difficult enough. On the bull side right now, we have the scenario that we made higher lows on the medium time frame. We have made higher highs on the medium time frame, and we have broken this medium downtrend and are establishing ourselves above it. That's what we have on the bull side. The bear side is we have not made a new higher high yet. That would be the case, and that would require that we close above this line right here. Let me make this pink, which would be around 4,845. So we close above it and confirm we made a new higher high after we made higher lows. Clearly change in trend. We haven't done that yet. And we are still below the 50-day, which is going down. So that is what the bears are holding their hopes on. And you know, I would like gold to go down short term for all the right reasons. I want to buy more gold mining stocks. I wouldn't mind adding to gold positions. And for that, I would love to get a sell-off. So that is the situation. We are basically in a market now that up until Monday and even Tuesday was about 75%. We're going to go lower once we break 4,500, which I had defined and told you in the last gold video. That was the important zone. That's where the institutional money is. That is their line of demarcation when they say, all right, we break below this, we're gonna short, we might sell short term. Either way, there's gonna be pressure coming to the market, because there's also gonna be a lot of stops right below that line. And again, if you missed that video, hit the subscribe button. And as you can see, we tested it, it held, and off we were to have a Ibiza style party in gold. So now we have a very clearly defined range that gold is moving within. We don't need to do much except pay attention to the two pink levels. 4,500 on the downside and 781 and 4,845 on the upside. I personally think that the 4,781 area is the more important one because that includes the 50-day. So here, Monday, Tuesday, beginning of the week, we're 75% bearish, 75% bearish that we're going to get a continued sell-off, especially if we go below 4,500. Hasn't happened. Now we are basically in a situation where we have to say we're about 55 to 45. It's like a slight bullish bias, but it's basically a coin toss. Now, this leads us to the factor that not enough people are talking about, and that is the good old dollar, the greenback. This is the Dixie, you know the chart. And as you can see, the Dixie in the past week has shown significant weakness after it has not been able to break the 50-day moving average and doing off the downtrend. And now we're at this blue support zone, which is significant, goes back 10 months, and it held in April, right? Came down, doinked off it, we're good. And now we got this descending triangle formation. We break lower, we're gonna go do this double support zone down here at around 96.75, where the uptrend is. Where does this uptrend come from? Well, as you can see, let me get to the weekly for this for you. This is a big one. This is the one that we have talked about for a long time that goes all the way, trading view, all the way back to 2008. So we break below this, the dollar's got a lot of problems. And obviously, if that is the case, gold would move up significantly. So we need to pay close attention to the dollar. That's where we're going to get a very, very important signal from, especially since the oil price has cooled off now because the Iran situation has cooled off. Which, again, you would think in classic gold analysis would be negative because it takes geopolitical risk and uncertainty out of the market, which risk and uncertainty, two of the most bullish factors for gold. But we got a new situation where the market is laser focused on rate cuts when it comes to gold as well as momentum. And as you can see clearly, we don't have much momentum right now. So if the dollar breaks down one further step to the, let me show you this again. So if it breaks down below the support zone, basically breaking to the downside out of this descending triangle formation, and gets a leg lower all the way to the uptrend, that obviously would be a bullish factor for gold. And that's what we need to adjust to as well. So it might be 55.45 right now for the bulls in gold itself if you would just analyze it singularly, but you can't do that with gold, right? You always have to look at the intermarket correlation. The oil price gives us nothing right now, so that's not a factor. Geopolitical risks are not a factor right now, but the dollar is. And the dollar, the way it's setting up, looks positive for gold. So what does that mean for our strategy? And I touched on it in yesterday's video. I'm not going to repeat everything again. Go back, watch the video. I think it's a real good one, and I would highly recommend you check it out because we're talking strategy there, and I'm just going to touch on this here, meaning you need to adjust your investment strategy according to the new developments. So let's use this as an example. You want to buy GDXJ, which is the big ETF for the gold junior producers. And you want to buy 100% position. And you're waiting for the sell-off because this schnitzel guy that looks hot in a vest and a tie, and that's why he's wearing it, let's be real about it, not because it's so comfortable, has told you he thinks we're going to retest the 200-day, which is the golden line that you see here, might even undercut it to trigger stops, and then may go down to the uptrend, the green line, undercut this shortly, but not make a new low, or maybe make a new intraday low to trigger more stops, and then we're clear and we're going to go up. And he thinks by the summer we're going to break out to the upside. Okay, that makes sense. So you wait with the money that you have to buy your full position of the GDXJ until this happens. But now the situation has changed, as I was talking about with silver yesterday, which, by the way, silver looks way better than gold. Interesting development. We're going to talk about that probably on Monday. Housekeeping real quick. Tomorrow, there's going to be a video. We're going to look at the weekly charts of gold and silver. Very important. We may get really important signals. Depends on what the market does today in US trading, obviously. And also, this weekend, we're going to send out a new video for a VIP newsletter, which is free, doesn't cost you anything, and we're not going to spam you. You can sign up, link is in the comments, or you go to bullmarketlifestyle.com, you can sign up there. We'll send you videos where we talk about subjects that are too small for the YouTube channel. And tomorrow we got a really, really interesting one, which is we're going to talk about the agricultural commodities, because I'm not sure if you're following those, but some of them are ripping already, which means to us, inflation, it's coming. Ding dong, here I am, inflation, I got a delivery for the world. Not great. Rising food prices coming right at us, which again, bullish for gold. So you have your 100% money allocated for the GDXJ ETF, but now you have to readjust because within the past 3 days, the situation in gold has changed. It's not as bearish anymore as it was at the beginning of the week. And this is the mistake that the private investors make a lot of times. They just sit there on their hands, they do nothing and say, well, I want to buy, but I only going to buy when it goes down. And they're not adjusting to the new reality. The new reality right now would be, for example, and this is just an example, I'm not your financial advisor, to say, I'm going to buy 30% right here. So I have a foot in the door in case the gold price breaks above the 50-day and starts to rally. That is a real possibility right now that, as we pointed out, is slightly higher than 50%. So if you're a smart investor, you should position yourself for this possibility. Could that mean that gold price goes down, GDXJ goes down, you're going to be underwater with that 30%? Yes, that's what it is. That's the price you pay. And that's okay. But that's why you have the rest of the money to then add in the weakness. But the more important point is that you're in the market if it rips to the upside. See, a lot of times the private investors just sit here and say, well, I want to buy GDXJ or I want to buy gold if it goes back down to 4,200, 4,100, with a 200-day moving average. That's reasonable. I can't argue with this. But here's the thing, and that's what I always tell the people. And I say, okay, for that scenario, you're 100% correct. I see your point. But what if the gold price doesn't go down to 4,200, 4,100? What if it takes a breather here, breaks the 50-day, and rips? What are you doing then? And then they look at me and they have no answers. And that is the big advantage that the institutional money has. They just go by simple percentages and probabilities. They don't care so much about, I need the perfect entry, I need to nail this. They care about, I need to be in this for the possibility that gold rips to the upside. That is the gold analysis for today. We're going to get important signals today. Again, weekly candle analysis tomorrow. If you want to know what's going on in the ag commodities, super interesting. Subscribe to the newsletter. That video is coming. Again, it's free. We're not going to spam you. You're just going to get quality content. Hey, take it from a guy in a vest and a tie. Have a great Friday. Have a great start to the weekend. We will talk soon. Bye-bye.